Hi, everyone. Mark Sorensen, Chief Investment Officer at Royal Fund Management. We're close to the end of the calendar quarter where we would do a typical quarterly market commentary video. But in light of the corrective activity in the market right now, we thought we'd do a video to see if we can explain what is going on and why sometimes doing nothing is the right answer, quite frankly. Whenever the market goes down and we get disturbed, I'll be honest with you, sometimes we begin to think with our hearts instead of our heads. For example, I saw in the news today where last week was the worst week of the market since September. Well, it's interesting to note that since September, we went to a new high that we recently came off of. And in fact, even with today's market action, we're still higher than we were in September. So yes, last week might have been the worst week since September, but that means we recovered from that, and we will recover from this as well. You know, it's interesting that in the last since World War II, there's been 64 times where the S&P 500 corrected 5% or more, and the very fact that we just came off new highs in the market proves that 100% of the time we recover from these events. I'm not a huge fan of Kramer on CNBC, but I heard him say something today that was an example of what I'm referring to. He said, in all my years, I'm paraphrasing what he said, in all my years of trading, I think he said since 1979, me since 1982, he said, I have made a lot of money in the market and I have lost money at some times, but I've never lost more than I have when I panicked and sold into a market that was down. So we encourage you to just understand that markets do not go straight up. We will recover from this just like we have the other 64 times since World War II. In fact, the very fact that the market came off new highs recently proves that we have recovered from every market drawdown 100% of the time. The key is to try to think 5, 6 months down the road, a year down the road, and know that we will recover. The American economy is in good shape. In our opinion, corporate earnings are good. Corporate margins are good. The consumer is still in good shape. And we have interest rates coming down. In fact, the most recent Fed survey indicated that they now think the Federal Reserve will cut interest rates 3 times starting in June, probably June, December, September, and December. So what we really have going on is what I like to call backing and filling, profit taking. Sometimes we just have to come down and set a better foundation so we're able to sustain the next move up. I would argue that every correction in the past has been a reason to think about opportunity as opposed to a reason to panic. And again, that's proven by the fact that we have always recovered. This is more of a buyer's strike. In fact, I would argue that best-in-class stocks are actually on sale today, and those with free cash, if you can think longer term, probably getting some pretty good investments right now because the fundamentals remain strong. The economy is growing. Yes, maybe not quite as fast as it was before, but the economy is growing and earnings are good, and we will do fine over time. A lot of people forget that when you have an oversold market like this, sometimes when it turns, it literally just rips to the upside. You have natural buyers coming back, those at short stocks having to cover shorts. And so the market may recover even quicker than we think. Again, doing nothing sometimes is the best move. If you like to play golf, play more golf. If you like to read a book. I haven't even looked at my account in the last week, and that is my way of saying, you know what? I am not going to think emotionally about this. We've always recovered, and we'll recover again this time. A couple other things that we obviously need to discuss. One, you'll hear a lot of talk about is this 1999, 2000 again, where we had the tech bubble? Did we get into an AI bubble that is now unwinding? I think there's nothing further from the truth. Companies back then, during the turn of the century, that when the internet became, the industrial revolution of the time, the fact is, companies back then didn't even have earnings. Today, we've got companies that are building AI that are big, high cash flow, real companies with real earnings. Back then, the price to the earnings ratio on the S&P 500 got to over 40 times. We're about 20 times now, less than half of that at the moment. So again, the best idea here is just to relax and know that we've always recovered, and we will again this time. Some people will talk about the market coming down because of the political environment. We had a big move after the election on the anticipation that lower regulations and other things would be business friendly to the market, and the market did really well. And now we've erased all that. People point to the tariffs being the reason. The tariffs create a lot of uncertainty that seems to change every day. And the market does not like uncertainty. And sometimes it sells off until such time that we get more clarity. But we do think that regulations and the reduction in regulations will help. We think the market will still do well this year. It just might be more more of the gain found in the latter half of the year. We expected more volatility, so this doesn't surprise us. And the tariff uncertainty, that really just creates the quote reason for the market to go down. Usually when the market goes down, it's simply because it was due, and the news of the day becomes the reason. From a political standpoint, there is no absolute relative to performance that politics really matter at all. The only thing that matters to the market longer term is earnings and interest rates. That's how stocks are priced. So yes, the current environment is creating some uncertainty, but we think we'll come out on the other side of this and reach new highs again, not too far down the road, just like we've done before. I do want to share a chart to give you an example of that. And let me take a look at that with you in just a second. I'll share my screen. Okay, what we're looking at here is a 1-year chart of the S&P 500, the broad-based market index. And the main thing I wanted to point out here is that if you look back last year from mid-July until the market bottomed in August 5th, at that time, the NASDAQ 100 went down about 15.9%. But if you panicked during that time, look what would have happened. The fact is that if you panic during this time frame that I'm kind of underlying, look at the upside that you would have missed. We think this is a normal correction. Maybe the market got a little bit ahead of itself, like it does sometimes. It got ahead of itself post-election, and now the retreat is also ahead of itself. So I would encourage you to stay pat. The only time you lose money is when you realize those losses by selling. And I know it's difficult. I respect that it's difficult. But the fact is, you have to check yourself and make sure you're not making emotional decisions. All of us are old enough to remember back in our life that most of the, if not all, of the emotional decisions we made turned out being wrong and created regret and created a lot of opportunity costs. And we think the same is true here. So even though a market like we're in right now definitely tests your resolve, be strong. Know that we've always recovered. We will again this time. And be patient. Patience will be rewarded. If you need anything, do not hesitate to get with your Royal Fund Management advisor. They have access to me if you have any other questions. But we just wanted to put out this video to try to calm nerves. Remember, think with your head, not your heart. Emotions cause decisions that we oftentimes regret. Doing nothing is oftentimes the best thing to do, and even ignore it if you have to. The, the market will again rip to the upside. We're oversold, and we think the flush out that we're getting today says that we're near the bottom. There's another couple things that have happened even last week that show that we're near the bottom from a technical standpoint, and that is we had 3 days in the last week where we had intraday reversals, which means the market's ugly, and then here come the buyers, and the market completely erases the downside move. That may not happen today, but those kind of reversals are signs that we're trying to establish a bottom. We don't know exactly where it will be, but again, it always recovers. Patience will be rewarded. We hope that's helpful, and everyone have a great rest of your day. Bye now.